Welcome, welcome. Alright, so this video is just going to be mainly about the main things that I've learned and I've been taught. I was actually mentored by PB from pretty much like November of 2024 going into, I think it was like, I don't know, April of 2025. I was in their Discord and it wasn't a mentorship. I mean, I live traded with them every morning, 5 days a week, and I left when I was profitable and I kept taking the same trades as them. But this is like the main stuff I learned, and it's like everybody can take good trades, and you win, you feel good, but it's about the things and the trades that you take and you just feel horrible for taking. You're like, why did I take this? Why did I take this? And then you don't journal it, and then you do it again and again and again and again and again. So I just want to kind of go over it because I haven't really seen a video. I mean, I don't really watch trading videos anymore, but I just haven't seen anybody make this, especially Patrick or Blake on their YouTube. But I'm just gonna go over like probably 3 to 4 things that I've noticed. So the main thing, just trading in just super bad conditions. So say pre-market, let's just say we're on the 5 minute chart. I'll actually show an example of this because this past week, this actually happened. So say we're trading up pre-market. Okay, we get a 5 minute inversion to the downside, and let's just say we come into I don't know, like a 5 minute for value gap here. We come into the 5 minute gap. We just really chop around, and let's just say the IFEG is right here, chop for like, I don't know, maybe 15-20 minutes, and then we finally get that close through it. Okay, let's just say we leave London low right here. All we do is come into maybe a 5 minute here. We leave London low. We're very premium. Let's just say like the current trading leg is like all the way down here, and you're longing all the way up here. You're longing in a premium. Let's just say London was already swept pre-market and Asia, and maybe you're targeting like, I don't know, like some random 5 minute high up here. And you take this 5 minute inversion, you leave all this low resistance liquidity right here below you, and you take this 5 minute inversion, take it inverses, maybe you go break even here, you target like the worst high possible right here. Let's just say it invert, or the high's up here, and maybe it's like a high that already swept out another high, or just something horrible, but you take it, it ends up just edging your break even here, or maybe it hits your break even, and then you eventually get stopped out, or maybe it doesn't even hit your break even and you do hit take profit. Most of the time, if you're taking trades like this with low resistance liquidity below you, you're gonna get stopped out, and most likely, like, the best trade that's gonna come from this is taking this internal high and then getting that inversion out of it. Maybe we leave a 5 minute inversion here below, and you just get a better play out of it. Maybe you get a mech model shorter here. Oops. You get a mech model here. Let's just say we ended up coming into, I don't know, maybe this like 15 minute here or something like that. Whatever's up there, you end up getting this inversion. You end up taking, and there's a 5 minute here, you end up taking this, and you get like a 1-2 or a 1-1, whatever. Just way better odds taking this trade than you are taking this horrible trade and whatever. But I'm actually going to go to example right now, and I'll go to this later, but you never want to take a trade going against low resistance liquidity. And but yeah, that's just the first example. And I'm actually going to go to one that actually played out. I don't know where it is here. Oh yeah, it was right here. It's actually right here. And this actually ended up working because I took a play. This is literally perfect. So we ended up just accumulating here. Okay, so right here, off open, we had a small move higher into this like discounted kind of premium 5-minute, but we get this play up into it. We get a clean version down, and we do end up making a 5-minute condition here. Okay. What do we do though? We accumulate. I'll just go to the 5-minute or the 1-minute time frame, I should say. Go to the 1-minute time frame. We have all these stacked lows here. Here, which was a Newswick. Here. Oops. Wrong button. Here, and then the final accumulation zone low that did not come into anything significant. And yeah, we end up making a 5-minute inversion here. I mean, you would have had a like a huge stop, and let's just say you target a 1-to-1. Does it play out? No. Actually, we'll see here. I honestly forgot. Holy shit. Okay, so it didn't play out. It did not play out. But like, say you had a tighter stop here. You were just aiming for a 1-to-1 here. Holy voice crack. Yes, it would have hit. Just a horribly low quality trade. I would never take something like this. We literally left London and Asia equal lows here, or not equal, but relative equal lows. Horrible trade. Do not take this. It's just shit. Alright, this is another reason why I keep seeing people keep taking unnecessary losses, and it actually does piss me off a little bit, but I only learned this once I got mentored by Patrick and Blake from PB, but basically you never want to long against you never want to long against a protected high, and you never want to short against a protected low. So what does that mean? So in this case scenario, it is a protected low. So what does that mean? Overnight, we trended downwards. All right. We came into this 4-hour for rally gap. Let's just say this is 8 a.m. right here. We sweep out London low, and we come into this 4-hour for rally gap. Okay. So what I do see for most traders and most losses, and this is exactly what I used to do, and I have it journaled to prove it, but so say we come down, sweep out London low inside of a 4-hour gap, and immediately off of market open, let's just say this is market open, we get that move up into, we'll just say a 5 or 15-minute gap, could be an hourly also, and let's just assume we get a V-shape to the downside here. We get a V-shape inversion on the 5-minute time frame right here. Let's just say this is a 5-minute inversion. We get that inversion to the downside. You take this. Oh my God, this is perfect. We got this low inside of for value gap. Perfect. We're almost in a. Let's just say we're in a discounted price range. Also, let's just assume price was up here into the 50%. This is still just a horribly it's just a bad trade. It's just horrible. Even if we were in a discounted price range, it's bad. This move down into 4-hour gap, you shouldn't be targeting this until we make a move up, and let's just say we take out buy side up here. We take out buy side. Let's just say then we get a 5-minute inversion to the downside. Okay, yes, then that is valid to take this trade. But if we get a sponsored move down into a valid price range, especially discounted, we traded into this 4-hour for value gap down here, and we get a V-shaped recovery to the upside. This is definitely just going to be a fake out right off of open, and you're going to get screwed most of the time. So just never want to take trades like this, especially when we just swept this pre-market, and it's just going to be a horrible Jewish fake out, I think they call it, and you're going to get screwed, and it's not going to work. So the only reason you should be targeting this low here is if we were to get that move up here, we trend up, you're going to get faked out pretty much, like probably 90% of the time. You're going to get faked out. We're going to take this buy side. Then let's just say we come into maybe like a 1 hour gap up here or something. You get that inversion up here, maybe you make a 5 minute below. You know, you can go break even at this 5 minute right here, and then you target this unprotected low because we took out existing liquidity up here, and now you can target lower levels. And this goes the same against in the opposite direction. Doesn't matter. God, I just spilled water everywhere, bro. Sorry, I just spilled water everywhere. Okay. Next thing I'm going over is about longing in a premium range and shorting in a discounted range. Okay? Very, very, very simple. So, let's just say overnight, assume you're trading New York session, which I highly recommend you trade New York session and New York session only. So, say we're trending up. Desk is still wet. Say we're trending up, okay? And this is overnight. And we get immediately off of open, we get a leg lower here, okay? Let's just say this is the range. This is the range we're trading from. Let's go like this. And basically, you only want to be longing from the highest high to the lowest low of the current trading leg. Okay, so this is the 50% mark, or the halfway from the highest high to the lowest low. Okay, so if you want to be longing, okay, you'd want price to tap the 50% or lower to be longing out of. And obviously, you know, you want to pair that with other things. You don't just immediately, as soon as we hit this 50% mark here, you know, you don't want to be longing just instantly. No matter what model you have, you are not going to be doing that. But let's just say, I don't know, we had, let's just go right here. We had this fair value get that got tapped into. We have this low here. And immediately off of open, we get this 930 wick here. We get that move down. We have a 1 minute or 2 minute, 3 minute, 4 minute, 5 minute inversion right here. We get that inversion. We close right here. We get that inversion. Bang. I'm longing that instantly. You know, depending on, you know, maybe this is London low, or this is a 4 hour for value gap, or hourly for value gap, you know, 5 minute intermediate low, depending on the conditions. You know, I'm going to be taking that trade. But if you want to be longing, I mean, the only time this doesn't really apply is at all-time highs. All-time highs are really hard to trade. Not really, but, I mean, at all-time highs, most likely, you're not going to get that retrace to a discounted price range, which is the 50% or lower of the highest high to the lowest low. And same thing applies to shorting. Okay. So right here, what do we have? Oops, I gotta zoom out. Okay, same thing applies here. Okay, so we have the lowest low. Actually, I should extend this over to the highest high. Okay, so let's just say we're sitting right here, right at open. We mark out the highest high to the lowest low of the current trading leg, which is right here. And let's just say off open, we have a 5 minute gap right here. Super discounted price range. You know, like I said, if you're going to be shorting, you want price to be in a premium price range. So you'd want to be longing off of something like this. We have a high here, It's wrong button. We have a high here. We have a fair value gap right here. Well, a very small fair value gap. And to be willing to short this, you'd want price to be tapping in to a more premium discount or more premium part of the price leg to be willing to short. Not something like this where we have, oh yeah, we have the most discounted 5-minute fair value gap right here. I'll just wait for a pullback into here and then short this. I mean, the only way I'd be willing to short something like this tiny pullback, is maybe we have like equal lows sitting like, I don't know, like right here, or I mean that's pretty much it. The only way I'd be willing to take something like this, or if we have like super V-shaped recovery off of this with equal lows, but otherwise I'm never gonna take something like this in such a discounted price range when I'm willing to short. I want something more premium. I want something toward the 50% range of the price leg. No matter what model you're trading, this applies to everything.